Welcome to our channel, Finance Experts. Now let's consider the risks and rewards of investing in alternative assets. Alternative investments. What are they? In essence, the term alternative investment is used to describe any asset that doesn't fit into one of the three traditional investment categories: stocks, bonds, or cash. They can include anything from real estate and cryptocurrency to private equity and venture capital funds. Alternative investments often fall into four categories: hedge funds, private equity, real assets like real estate or commodities, and packaged securities known as structured products. These investments might be less liquid than their conventional equivalents because of their alternative nature, and they might need a longer investment period before any substantial benefit is achieved. Why should you buy alternative assets? Since the financial crisis, interest in alternative asset investment, or ALTs as experts in the field refer to it, has increased as investors look for better diversity in assets that don't perform like stocks and bonds. Alternative investments can be a potent tool for portfolio diversification, but they come with substantially higher risk and volatility in value. Alternative investments offer better portfolio diversification and perhaps a lower risk because they have no link with established asset types. For example, crypto may do well when the stock market is under pressure. Cryptocurrency. Cryptocurrency, sometimes known as crypto, is a digital currency that functions a little differently from the norm. Cryptocurrencies can be used to make purchases in the same way as traditional currencies like the US dollar or Mexican peso. Similar to how metals like gold provide a buffer against the ups and downs of government-issued money, cryptocurrency similarly serves as an investment. However, unlike a centralized government that creates physical currency, which is governed by a formal authority, cryptocurrencies are created via decentralized digital record-keeping systems. Advantages of cryptocurrency. Privacy. The blockchain, which hosts cryptocurrency, is a secure system by definition. Blockchains hide data from prying eyes and don't make users' identities and contact information publicly available. The sender's and recipient's names are typically visible to the bank during a financial transaction, which quickly draws attention to both parties' identities. Only the wallet addresses of those taking part in the transaction are visible on a blockchain. But cryptocurrency isn't normally anonymous. It is somewhat pseudonymous. This is due to the fact that your identity can be linked to your cryptocurrency's wallet's address and transactions. However, privacy coins like Dash, Zcash, and Monero are made to completely avoid this problem. Many different currencies are available. While the use of fiat currencies varies from nation to nation, you can utilize hundreds of cryptocurrencies anywhere. For instance, you can only use pounds as a conventional tender if you are in the United Kingdom. However, you may buy and sell tens of thousands of various assets if you use a cryptocurrency exchange in the UK. Furthermore, wherever you go, you can spend the same amount of Bitcoin. International transactions at a lower cost. The procedure of transferring money back to family members, which might involve expensive fees, is a major issue that many expatriates face. Additionally, sending money to relatives, associates, or enterprises located abroad may be an expensive ordeal, with exchange rates occasionally making matters worse. The amazing thing about cryptocurrencies is that they don't charge extra to send from one jurisdiction to another. While you might pay blockchain or exchange fees when transferring or trading, these won't alter according to where you are. Before sending any money though, be aware that some exchange platforms charge more for overseas transfers. Disadvantages of cryptocurrency. Continuous price changes and crashes. The fact that prices rarely remain constant for very long in the cryptocurrency market is one of its biggest drawbacks. The price of a common cryptocurrency will change several times each minute. Even while these variations are frequently slight, it isn't always the case. Unfortunately, crashes happen frequently in the cryptocurrency sector since so many well-known assets experience significant price declines in a short amount of time. Numerous cryptocurrencies, including Bitcoin, Ethereum, Litecoin, Dogecoin, and hundreds more, have crashed in the past, sometimes independently and sometimes along with the rest of the market. This puts investors in constant danger. Some nations prohibit the use of cryptocurrency. Although most countries allow the usage of cryptocurrencies, several have put restrictions on or outright outlawed them. These nations include China, North Korea, Egypt, and Turkey as examples. So if you wish to trade cryptocurrencies but live in a country where it is prohibited or limited, things will be difficult for you. Real estate. Real assets come in a wide variety of forms. Real assets include things like land, timberland, and farming, as well as intellectual property like artwork. However, real estate is the most prevalent and largest asset class in the world. Real estate is a fascinating category not only because it is large, but also because it resembles equity and bonds in that property owners receive current cash flow from renters or capital appreciation, and they aim to increase the asset's long-term value. Advantages of investing in real estate. The real estate produces consistent cash inflows. A property that is currently rented out produces a stream of rent payments each month. For amenities like washers and dryers, storage, and parking, some homes may require additional charges. The net cash inflows could be sizable depending on the balancing financial outflows for things like mortgage payments, property taxes, maintenance, and so forth. Real estate offers an insurance policy against inflation. Constant inflation tends to reduce the returns on the majority of investment types. Real estate, which typically appreciates at a rate faster than inflation, is one exception to this rule. Investors that view real estate as a hedge against inflation are more inclined to bid up its price when inflation is high, which is one of the reasons behind this. Due to its reputation as a secure investment, real estate values may also rise in uncertain times. Investing in real estate has drawbacks. Real estate investing is a difficult process. Real estate investing usually produces profits over a long period of time, but only if you make wise purchases and put enough money into maintaining your homes. Additionally, a significant amount of effort may need to be spent managing the properties, depending on the types of properties purchased and the character of your renters. This can prevent you from taking any vacation time for years if you intend to manage properties on your own. Maintenance is required for real estate. Unexpected maintenance problems like a broken water heater or a leaky roof can occasionally occur. The accompanying expenditures for repair or replacement could be high and deplete your cash reserves. This can be especially shocking if the problem was missed during the home inspection of a recently purchased property. Hedge fund. Hedge funds are occasionally the highest earning investment instruments, and occasionally they perform significantly worse than any others. A hedge fund is a type of investment vehicle that pulls money from numerous participants and invests it in a range of financial products such as stocks, bonds, commodities, and derivatives. Professional money managers that specialize in managing hedge funds use their knowledge to produce profits for investors. To maximize returns, they frequently use complex techniques like leverage, short selling, and arbitrage. Advantages of hedge fund. High returns. Because hedge funds employ complex investment methods, they have the potential to produce returns that are higher than those of other investment kinds. For investors searching for long-term wealth growth strategies, this may be advantages. Diversification. By investing in a range of assets, hedge funds enable investors to diversify their portfolios. Due to the fact that not all investments will yield the same returns, this can help to lower the risk. Drawbacks. High risk. Since hedge funds are very speculative investments, people with limited risk tolerance should avoid them. The potential losses may outweigh any potential benefits due to the unpredictability and risk involved in the tactics used by hedge fund managers. High fees. One drawback of investing in a hedge fund is the high cost involved. Hedge funds frequently charge a 2% management fee, in addition to a performance fee that can reach 20%. Before choosing to invest, it's critical to comprehend how these fees operate because they have the potential to eat into any returns. We investigated the definition of alternative investments, the asset classes they fall under, and how they differ from more well-known conventional investments made through public markets. Make sure to have effective alternative investment methods so that you will be able to have unexpected economic benefits. Thanks for being to the end of the video. Don't forget to like, share, subscribe, and tell us what you think about this video below in the comment section. Thanks for watching, and we'll see you in the next video.